Did you do it? It's 9:28 a.m. November 27th, 2018, and I'm going to start us out on a chart here. So the S&P 500. We're at the Yahoo Finance board. I thought I'd start here because most of you are probably familiar with Yahoo Finance. I'm going to take us back to the second week in March 2009, and I'm going to show you. That's where the actual bottom was. Now, if you'll notice, it says the market opened up at 729 and 57 hundredths that morning, and the highest it went that week was 729 and 57 hundredths. At the lowest point that week, which is the lowest point, that's when the market bottom, was 666 and 79 hundredths. It closed at the end of that week at 683 and 38 hundredths. The volume, 37 and 96 hundredths billion. Percentage change, it was 44.72% below its highest point that year. Okay, now let's fast forward. That was second week in March 2009, 666. So every time the market increased another 666 points, that was a 100% increase for those lucky enough to get it in right at the very bottom. There was a whole lot of them. It wasn't me or you, but let's just check this out. Let's fast forward. Okay, 660. Okay, let's just see what we got here. At 1330, what was that? 1332. It would have been a 100% increase for those. And then at 1998, that would have been a 200% increase for those lucky enough to get in at the bottom, somewhere in here. Where? Okay. And then at 2664, that would have been a 300% increase for those lucky enough to get in at the bottom when it was at 666. All right. Let's see where we at. Oh, the S&P is down another almost 0.4% already this morning. Now the Nasdaq's been the big man on campus since the bottom. Okay, up until 2009, the S&P was basically the barometer to look at, unless you were watching the Wilshire 500 or Wilshire 1500 for the world. But the S&P 500 is the one to watch. And where are we at? 2663. So I'm afflicted with the need to look in things in percentage terms. Now from 666 to where we're at right now, 2600 and so, that's almost 300%. Now how long has this been? Let's see, second week of March 2009 to November of 2018. It's about 9 3/4 years. 9.75. Okay, so 300% divided by 9.75. Well, what's that? Almost 30% a year. Now I got to ask you, is that sustainable? Or, I mean, it looks pretty healthy, doesn't it? But I mean, really, a good average for a healthy stock market up until, well, they've got this going back to basically a good healthy market's around 7 or 8%. If you can't get that out of it, you're not the market's not very good. But 30% a year is not sustainable, and 666 was the bottom. Okay. And let's see what else I can look at. Alright. Well, it just looks a little frothy to me. Okay. There's a lot of good earnings reports coming out, and a lot of bad ones, but you got to watch. Look at the double bottom right there. Looks like it's a double top here. Next time it gets up to this level is going to be a very important time to tell. If it gets back up there and it closes above that level, it means it's probably going to take another leg up. So I'm not saying buy or sell stocks. I'm saying, you know, get with your financial planner, and if you got 401k, you know that's just a mutual fund. So, and they could play with that money for 2 out of 3 months, as long as they send that prospectus out and it's accurate. You know, they could sugarcoat that portfolio. So did you do it?